MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? How we doing? Hope everybody had a good week. We are at Friday, the last trading day before ahead of a long weekend. First day of September. Should be an interesting show today. Not a whole lot of volume on the board today compared to yesterday. In fact, let me go ahead and bring this up so we can get this pre-market awareness. Now I'm gonna be in sim mostly today. That's got kind of a distraction right before trading, so I'm not gonna easily throw me off of my game, so I don't, I'm not gonna put my money up at risk when I have, something that can take me off of what I should be doing, right? Take me out of my A game. All right, so let me bring this up. All right, there we go. All right, so there's our pre-market volume check. Just, I think it's lighter than yesterday, but some decent volume across the board. I'll hit that later. We got about 6 minutes before the open, a little bit over 5 minutes. Let me go ahead and get through this. Boosting our ATR. This is why your awareness, pre-market awareness is so important. You don't want to make sure that you're in the right mindset to trade for the day and to make the best trading decisions. Gonna be it that's enough for now, because we got like 4 minutes before the open. Kind of a slow start for me, so that's good enough awareness to get us going. I don't see anything that's major other than got one more thing there. Let me get my volume levels and I'll be ready to go. huge volume gap right there. Below 600, all the way down to like 580. If we make it down there, we also got like a little bit of a significant volume decline around PR -1. Like 515-ish. Our value area between that 580. Still the main value areas between that 580 to, let's say, 520 range. The pre-market or after. So this little period here leading into the open. Slowly becoming like the key value area, but right now it's still from the overnight trading. So we're holding most of the value. Of course, so there will be many traders that are expecting price to make it back towards that, make it back to the mean. So we'll see how this plays out. Did I get this screen? Yeah, I got it. Post this in the Discord. And the market is open. All right, I'm ready. Got my checklist done. All right, let's see where we at. Starting to see that inventory decline.
Yeah.
Making our first attempts to make it back to the overnight mean. Make it back to that value area. Let's see if we got enough of pressure to break this inventory. It's a nice inventory response off of 612. Of course, anyone that took some shorts there, that'll be a nice place to cover. Also understanding that from the other perspective, will give us reasons to initiate some positions there. also where my MSRP is. Going back into A1 around 630. Alright, getting into a supply response in that 630 area. Looking to see if we push that supply higher. That was just a quick supply response. Alright, there's a supply push. Taking us back into the range. Got the power range move above 640, 638. See, we break above that moon around 680. Right now the session high is right under 670. Right, nice supply response there. Back to that 612 inventory. In this area where we didn't have a lot of volume. Getting some inventory responses along the way, budgeting our way through this. Crossing over VWAP. Looking at PR plus 2 at 560 area, the low of of our economic news response or whatever. But we got volume. Volume starts to pick up right here. The price is right now around this 580 area. Seeing more participation pile in there. It's reasonable to expect start to see some participation in this area here, all the way down to that 560 area. We can expect that it can still, not get that, and the price can just drop straight through there. But that's just an area that I'm looking at. Be surprised to see some front run of that. There we got potential front run right there at 564. I can tell I'm not even locked in like I need to be, because I'm not even thinking to take a trade. I'm not even looking for a trade. If that wasn't the plan. The plan was to just use SIM to test my awareness and to make sure that's how locked in I am. So I can see that I'm not as locked in as I need to be. So this is all part of capital preservation. You want to make sure that you're completely focused like you need to be. anything that can take you off of your focus, definitely want to proceed with caution. Just in my opinion, you can do what you want to do. The overall goal is to kind of trade like a robot, but we're not robots, we're still humans. So you can build an automated system, but even your emotional state can take you out of how you need to maintain an automated system. So I still, no matter how you're participating in this environment, I see personal situational awareness as something that is key, to make sure that you keep on point, if that makes sense. Trying to get that thought out and watch price at the same time. We got the supply setting up around that 566 area. What's going on?
I have a headset, but a little bit late. But I see you're on, so I'm hopping on.
All good.
Say something else, I can't hear you.
So we're continuing to drop the inventory beyond that point that I was looking at as a point of, to see some participation come in. We are getting participation there, but we're dropping that inventory down into the 40s.
So let's talk about this for a minute, just a few minutes. Let me try to keep this under 5 minutes. Let's see if I can keep it under 5 minutes. So from my perspective, what we're witnessing is, I think I've said this before on stream where it's been caught, but me and you, Rob, we've definitely spoken about this, where if there's a big impact day to where the exchange and your broker send you an email saying that the margins have increased, so that day before, we're going to get some very interesting, what, if you ask me what it is there's a pricing in. And what does that mean? It means I'm going to kind of go to the battlefield the day before, and I want to see kind of how people are going to be positioned based on these triggers. So I'm going to go through the whole gamut spectrum of how I trigger participation in my crazy range, do my thing. And then when the news comes, I can get the most liquidity that I possibly can. Because for me, having to hold the responsibility of creating this big grand illusion, it's getting super intense. We've got this thing called AI here that's pricing in. So with this open, man, anytime the New York, the cash open is coming to like the Asia high or low, we're like at the Asian high, or EU London high and low, like we're just pushing it and they're just pushing price right there. It's a big giveaway that I'm forcing participation who has to come into the market at certain times of the day to buy or sell here. So it's a big giveaway where after that big news, what took place yesterday, and then what we're seeing today. So this is like from a retail perspective. If I feel, this FOMO thing come in on the emotional level, and we're at highs or lows, take the other side. Look for the other side of that, because you're literally being triggered. And a lot of what goes into these emotional triggers are so deep. It takes to be honest, it takes, I would say a season where I can get you conditioned by you looking at their charts to start to react emotionally. And if you don't believe me, just watch some of these streamers on the Nasdaq market, all talking about transparency. Good God, man. I'm going to say this, and this may be a bit controversial. Who cares, though? But when it comes to you, your uniqueness, your talents, that's you. If you could, that's you. No one can. So when you talk about this thing called transparency, what are you being transparent about? You're being transparent about the fact you have no fucking clue who you are or what you're doing. And for those who can see, we can see that, and that's cool. But for those who can't see, what happens is you only know what you know and you don't know what you don't know. You start, what happens by way of frequency if I only know what I know and I don't know what I don't know. And there's this streamer trading this market called the Nasdaq, and they've got full transparency. Look at me. If this is all I know, it may resonate, and I go with the flow. Then here we go, the conditioning. See, this is why I say there's a season to it. So now I've got you conditioned to where you only know what you know and you don't know what you don't know, and you look to this external, and I've got all this code conditioning you. So it brings me back to these highs and these lows. So then we get to these cash open. I'm on the retail side of the show. And there's this streamer I heard, and there's this guy in the background talking about this could be a trade opportunity. If you're looking for a trade opportunity, you don't have a single trade, don't know anything about consistency, you need somewhere to start. Here's one. A specific trader, high, lows on the EU. So coming out of London, man, they're pushing high. So when the New York opens, we're at their high or their low. Something is being priced in. So it could continue and it could continue. All right, that's one option. The other option is this is the real magical one, is you're gonna just do your own conditioning. You're gonna look through your own lens. You're gonna tap into you and your point of view. So am I feeling FOMO with this? Is this trying to get me to buy or sell in? Whatever that is, if you're being honest, that's where you're going to flip to the opposite and start to go to your mechanical, whatever your consistent discipline, however you attack and execute your price, whatever that may be, whether it be a trend line break, whatever it is. Now I'm going to use that as a trigger. I'm going to look for the opposite side of this high-low flow here. Now what's up? And just do that. Only do that. 3 months. Only do that. You're going to hold the perspective of you can lie to everyone else, but you can't lie to yourself. What's happening? So the FOMO's kicking in. I take the opposite of the trade. This is what happens. I'm going to take a picture of it, screenshot of it. I'm going to look at the variables, being honest with myself. Here's what will happen if anyone does this challenge. You're going to tap into a state of awareness and frequency that in this time that we're in will separate you significantly from the pack. And it'll allow you to survive what I call the new time that we're in, where AI's here. And it could have been here from the beginning, to be quite honest. And to be quite honest, it has from our mechanical movement. But there's a difference happening now where there's a separation, where now we can see that we've been moving in this AI mechanical conditioning this whole time. Now I can see, because AI's here as a reflection of me to allow me to see this time. So again, this isn't for everyone. This is for those people who want to. What would you be doing? Holding the human spirit. All right, I'm a few minutes over. I'm going to stop, but the market's given me the opportunity to. Why? Because this trade we're seeing right here would be that trade where you could just literally just ride. And this is one where you catch the market It has to do it. Has no other choice. And it worked its ass off to get to that high on the open so that it could do this, get the best price. So this is where we want to be on the retail side. And this is what they absolutely fear when we break from the conditioning and we start to use our own uniqueness. So I'm me, you're you. You have a different point of view. You don't want to follow the crowd. Stop doing it. It's a bit controversial, but now don't do it. If you want to do anything, you want to be quick and clever, start betting against it. Because it's all conditioning, programming. All right, I said I would stop, but I am going to stop now. I don't even know if I'm still going.
Definitely good. And you stopped at a good point. That's in reference to what you were saying, because you're right at that overnight low. I think this is from the Asian hours. Where was this set? Okay, right before the London session, we set this low. So, I want to kind of piggyback on that.
That's right. We're at the EU low. For me, it's a EU. It may be also the Pacific Asia low as well, because I'm not looking that far left. But you see what I mean?
Yeah.
And just naturally, when we speak, there's all right, I'm gonna stop.
So to kind of piggyback off of that, I want to kind of throw in the wholesale perspective from that. So we have you just went over kind of the retail perspective and how you can use this information and how the emotions how this environment is ran off of emotions, and how you can be triggered into taking certain actions. But from the other side of that, that I'm calling wholesale, there's other entities involved, but I'm just you talked about the retail, so I'm going to cover a little bit of my view on the wholesale. So this price that we're at now, this was already a goal to get to this price probably before the session even started. I'm sure before this session even started. So knowing that we got all this news coming out today, we also have ISM at 10 and all that, right? So we can, and then you got AMP saying, putting out their stuff, or these cheap brokers putting out that they're gonna raise the margins to 25% and all that stuff that can be used as a kind of signal that we're going to get increased volatility, or it's gonna, things are gonna get the frequency or the pace is going to be outside of the norm, right? So with all this information, wholesale can be like, okay, we want to get to these lower prices, but we need the budget to get down there. Or we want to take advantage of everything that can, all the emotional energy that's going to come with how we traded so far. We're seeing that we're just, price continues to climb higher, even though the overall sentiment is that a crash is coming, or that we're going to see lower prices. There's a lot of emotions being triggered. Then we got the news coming out, and they raised margins, they increased margins, so that's triggering more emotions. So we can take advantage of that. We can get more. We can increase our budget by moving or fulfilling those orders in a way that's going to move price higher and catch that value at higher prices.
One thing quickly, I have to interrupt. How you can take advantage of it. Step one, immediately, as a base foundation, is you go to the edge. So if I'm looking on my screen, whatever board I see, where's the edge of where validation can be made, where I can say, this is where the break will happen for me in the way that I see. That's where I want to be. That's where you want to be. So when these triggers step in, I can't do anything else except move to the edge. Let that be a first step. And then you're going to have to hold that frequency, the discipline, find consistency. And this is what I mean about that frequency state of awareness. So I'll stop there, but I wanted to give application, the edge. Go to the edge.
Right. And then as you know, so to kind of fully take advantage of that, it helps to understand, like, your level of understanding kind of helps you of, you know, the different, so the more that you understand the situation that you're in, no matter if we're trading or if you're, let's say is towards stuff like health and fitness or your job or whatever, the more you understand that environment and the different movements and the different participants, the different elements of that environment, the more that you can take advantage, the more that you can use that information to take advantage of with your frequency, right? Operating from the truth of you, you know. So with trading, how I call it trading from within. So kind of continuing on with this wholesale perspective, let's just take this right before the open. We had this push higher, and I don't know if you can still see this, but we had this on that 8:30 news. We had this push higher into that range there. So we, like, overnight we grabbed some inventory. We took that inventory and we sold it to the supply that was interested in that higher value. So we're just getting rid of all of that inventory, and we made one last little push to dump the rest of that inventory. Now we have a budget. Once we dump that inventory, that improves our budget. So now we have a budget to make it down to those lower prices, and because we can't just take the price straight there, because that'll just completely mess the market up. So you got to be able to play with inventory and supply to make it down to this 500 range, right? And then once you finally get down there, now we're seeing that they are interested in this area, whether they want to budget some more or they want to continue dropping or continue taking value or the current price to that lower inventory, or inventory at a lower price. So you can take advantage of that with that understanding, and you can however that you interpret that, because you have to interpret it for yourself to take the most advantage of it. With that understanding, you can take that and know that, okay, I see that we pushed higher, but we dropped immediately. And then now maybe however you see that, you can build a strategy around that.
And just look what's happening now. It's almost like what you just said at the highs. Here we are as we come into those lows. So would this be like the start of a budgeting phase? So we accumulated, we did our business at the highs on the open. We've repriced into where it makes sense and there's more advantage to grab the business at the lows. And just as we're describing this location, we don't even hang out here for too long. Mm-hmm. And we're seeing just, man, that's like...
And on the way down, we actually saw that area, that 560 area, where I started to say that we were seeing participation there, but we're still continuing to grab cheaper inventory. We actually started there. They started, grabbing more inventory there from my perspective. Right, so they took it all the way down to the low, and so they have a basket of inventory, budgeting along the way. Right, it's not just one or the other. It's an and type of situation. And then now we're releasing some of that inventory, potentially setting up another area to budget. But we don't have to if we don't want to, because we already grabbed enough inventory to move price or to move to the next value area.
You saying that and the way that you said it triggered me to think about what I've been witnessing. So I like to watch price in the extended trading hours where it slowed down, where I can consciously go for tick tick, trade for trade, and hold the awareness, kind of watch the game. So when you say it's an and thing, when you're talking about the budgeting and the transacting as we're moving down price, bringing in supply, unloading supply, doing all of this budgeting, right? What I was witnessing was kind of when you use the word and, it's almost very interesting. It's almost like, so we're right now looking at the 48, 47, 49, and then we're coming down maybe 45, and then we'll kind of splash a little bit before here. Like I'm watching this on my screens with the splash of the orders coming in. The and thing that I can see is like, if you can imagine, like I have to fill the order at this price. And the market is here. Like I get paid to just get this order filled, and what I'm trying to do is kind of put a little bit of magic of the type of thinking that it would be where those who have to move. So a lot of what we're seeing now with this price is a lot of what has to be done is moving price, because if I don't have to do it, I'm not going to do it. If I'm honest, I'm not going to, not in this environment. There's too much risk. So if I've got to do it, we're seeing a lot of that. Anyways, so what I'm seeing is, and here we are, if I'm a seller there and I'm in that price range and I have to get it out, I've got to unload. And there's a buyer there and they want to buy and they're trying to find me, and we're trying to get the best price. You see what I mean? Mm-hmm. So I'm going to get in an environment where I cannot lose. I cannot tell you how the margin is so thin to this environment that we're in. I'm talking about on the global stage. So it's a big deal. So anyway, so once we find, you know what I mean? So we're seeing what I have to do. So if I'm looking at these prices, like here we are, we're at a new grouping. And just as I say that, there's a participant on the other side who sees that buyer. And if I'm the seller and I can't fuck around and I just found the buyer, the moment I see that buyer, they're going to be triggered in. And if they're stuck, okay, there's so much going on. Let me speak about 1 degree, since I've got this line of frequency, and I don't think anyone's spoken about this, but this can be seen. Just watch. When this mechanism of back and forth that I was describing, where I'm a real buyer, I'm a real seller, and I'm looking for that other counterparty. So I have to fulfill my orders. Once the price gets there, I've got to transact. I've got to transact my business. So when we get to the 510s and I'm a buyer and I've got to transact, So how am I going to transact? Do I've got AI that can hide me in a way? There's even all kinds of names for these. One of a term that they have in the banking is anti-gaming. Do I have that anti-gaming mechanism and an automation that can allow me to be a buyer and remain hidden? Or am I on the archaic line of thinking, which a lot of this proprietary, all transparency, what you see, you only know what you know and you don't know what you don't know. It's so just just so simple, where it's going to be triggered. So once you hit my price, I'm triggered in. And there's no stopping it. I got triggered in. That's it. I'm going to step away. This will be a first degree, where we find a participant who gets triggered, and we'll call it a rolling clip. Let's say I've got 10,000 transactions, contracts that I've got to feel at this price. I don't give a fuck what happens after that, but once that price gets in, my rolling clip goes. So that still exists in this show that we're watching. And a lot of that just took place. So once we got down and that buyer's there, I cannot, boom, my rolling clip has just been triggered. We're now in the degrees where there's a seller there who can see this. There's no way they're going to do a human emotional thing and just try to hold price right there. Hell no. This is the for real show. And if I'm the real seller and I found the buyer, praise be, I'm going to lift the offer because there's a rolling clip there and it's just going to keep coming. And there's a sequence to it. And I've calculated, I've quantified it. I found the rolling clip and it is going to end. And this is great for me because I got a big position I need to unload. So I'm going to get the best price of this show because they're mechanically clipped in. I'm now aware of it. And if there's a buyer here and I'm a real seller, well, I want to get the best price. So I'm going to list. And I'm going to watch this mechanical clip. And then I get to watch all the other participants. So that's an example of a first degree order entry that takes place that a retail speculator would need to be aware of that you could witness. So that's what we're still kind of in, I'd say. So that clip was triggered. It also generated an increase in participation to the exchange. We're now in a reaction phase, and this is being priced in, where now it's the orders slowing down, that roll is slowing down. And I know because I'm measuring it from the second, the moment, the millisecond it came in. All right, I'll stop. And we'll just, I'm definitely done. You know who's not done? Our seller. And guess what they got to do? They got to get the best price, not having to spend any more than they. So this is the time we are in. So to what degree am I aware of all of this?
I'm just sitting here watching this, seeing where the mechanics are. And we are seeing a couple mechanical reactions to things that I have, to automated points that I have labeled as MSRP and A1 and all that stuff. And it's a bit, you can kind of see the back and forth. So we have this mechanical inventory response over here at 10:04. And then but we flip that, so when our seller comes in and gets their best price, now we see the mechanical supply, or the mechanical response be more in favor of the supply. So there's a little kind of a automated, by the print, kind of an automated battle being shown to us, being advertised.
And that's the giveaway. That's the giveaway. To this specific scene, but you'll see it in every single one where that same technology is being manifested. And it's even down to the language. So there becomes this thing, but then it's to what degree we are aware of it. This is why I say the markets are the matrix code to the reality, because what you're talking about is a mechanism that is, the depth is in spirituality. So there comes a balance point to where the buyer and the seller have both, what would be a word for it? Where we're in. It is what it is. And I think I've mentioned this the last time we were on stream, and I was talking about how there's these moments where the retail side actually could change everything.
Mm-hmm.
So that would be those. So we're now getting closer to the moment. So here we are. It's just organically unfolding. This next follow-up as I'm talking, it's relating back to this. So the moments where you can actually change the reality would be those degrees of awareness where we can see our buyer, our real buyer, and our seller, they're in. And what's happening is there's a mechanical tick, 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 tick nature where it's like, oh shit, now the math has to. Now I'm going to keep price here until I get what I need, because it's, you see what I mean? So a lot gets revealed in those moments when we get into that mechanical quantifying. Because it's going back and forth because we're both in. And now it's just about the math. And that's where we come in, the retail side. Because we're getting triggered by the mechanical price is going back and forth. So I think this is actually good, really, 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 really good back and forth. And this is going to be one of my favorite ones because of it kind of encompasses so much of what's been said, and now we're getting in. Anyways, I'm gonna stop.
Mm-hmm. And it's where most retail would look at this as, you framed it as being good. Most retail would look at it as being bad, and that's by the program. But what helped me a lot is embracing the back and forth, and that's where I was able to kind of understand like the market from different perspectives. Now, what I really wanted to touch on is you made the powerful statement that you made of the power that retail has. And where was I going to go with that? Okay, so, and this is where it kind of makes me think about how we're always told that we don't really affect the market, we don't move price, and the institutions and all that move price. But I think we're told that for the around everything that we're talking about this morning, because they don't move price without us. So we do actually move price. You need retail. They need retail in order to be able to get the liquidity that they need. And this is why there's this game of advertising with the liquidity and with the mechanical price action and all the structure and the double tops and all the stuff that everybody is taught as points of advertisement, so that because we need retail to participate, and that's why you get all the different products coming in, because the overall markets, their goal, so like the CME groups, their goal is just to collect fees, right? The market, their goal is to collect fees, so we need participation. And then the other big participants, they need retail in order to take the other side, because if they try to fight against each other, it's not gonna work out as well, because you're gonna get this battle and it's not gonna be as feasible, right? So you need retail that's gonna come in and also provide that liquidity to get the results that the big money are trying to get. So this is where we get this whole game of this back and forth and all the emotional triggers and all the stuff. But retail, with all that being said, if retail understood how valuable that we actually are as a collective, we kind of saw this with GME, a couple of years ago, but we actually could change this whole environment.
And one last thing, it doesn't even exist as a game if we don't play.
Exactly.
And that is like the real crux of it. Good God, what would happen if one day there became like an awakening where we were well, I think it's starting to happen now. And what they're trying to do is step in front of it. It's what I'm trying to do with this AI that's in these markets, I'm stepping in front of it. So how do they do that with us, against us? How is that used on us, against us? Well, I'm going to take, oh man, now we're getting, I don't know if we can get this. I don't know if we should be getting this deep. It's crazy how it's ended up at this level, but man, oh man, just this stream here has got me thinking and seeing, really in a more whole way. It's just as time moves forward, if it is, it is. And if you're paying attention, there's going to be these truths that have always been. And then you're just watching the connection as a vibration, and then it manifesting. And then it's almost like a wave, man. And then and this is why it brings it back to the markets. It's like the matrix code of the reality. So we could change, and it would happen as a wave. It would first, these conversations would happen, then someone listens and it triggers them to start looking at things differently. Mm-hmm. I never heard that way of thinking before, but now that I've heard it, if it's true, and I start to see from that point of view, just naturally on my own, it'll click. And then by way of frequency, I'm operating from that higher degree. So the more that I'm witnessing what's happening, you'll catch on to the tricks is what'll happen. Mm-hmm. And then when you catch on to the tricks, if you're really clever, you'll make money off of it. So when the tricks are ran, the scripts are ran, the narratives are ran. Since it's the same script, the same narrative, the same trick done in a quantumly different way each time, right? But it's the same thing, which makes it confusing. But if you get closer to your truth of seeing things, you can lie to everyone else, but you can't lie to yourself. That confusing part gets easier, and you get to see the truth of things, that same thing that's not changing in each scene, as you're paying attention and you're watching the participants, the real variables that are constructing this thing I'm looking at on the screen. You'll catch on to the games and the tricks you'll start to see. So when we begin to profit off of it collectively, that gets. And then that takes us to the next stage. I think we're starting to get there. Could we be like into the next stage right here? So this is where it really becomes important, because man, let's leave that for another stream.
I think it moves in cycles. I just watched a video not too long ago. I don't remember what it was, but it talks about how history kind of operates in cycles. That's not the term. I'm strongly paraphrasing. If I can find a video, I'll put it in the Discord later today. But I mean, like, I think we are at a point to where we're kind of at one of those points of the cycles, to where we would call it, I guess, like awakening. And then there are a lot of retail traders and a lot of different participants that can see certain parts that they couldn't see before. And you kind of, when I look out and I see how people are talking about the market, I can kind of see that. But it'd be interesting to see how it goes. That's the overall kind of thought that I have there. I'm not trying to, speculate on it too much. There's another point I wanted to make, and I just lost it with that thought. Whatever. So just give a kind of a update or summarize like where we are right now. So we brought the shop back to VWAP. And then we're kind of seeing the supply response here at 580, and that's where we have some automation up here in that 575 to 580 ish range. Got some I'm seeing some inventory here around 568. So we're just kind of budgeting from from a zoomed in perspective around the VWAP. And I wouldn't really give an actual direction to it. I can actually see price heading in either direction from here. The print from a 3-minute perspective, it does kind of give some interest that I can see, something that will be interesting for a seller. But then if I want to look at this from a buyer perspective, I would also be looking at the price that we're at right now, maybe down to 560 in this inventory range, as a place that I'd be interested into conducting business. So I can see price actually moving in either direction from here. So that's when when I say that a lot, I can see price going in any direction, but I wanted to give a little bit more clarity to why I say that. Were you gonna say something else?
I just quickly wanted to just get out something we talked about briefly, and that was with Sierra charts. It allows us to tap in and really see the change of price depending upon, really how fast our machines and screens are. And when you look at it from that perspective, what you get to see is a rhythm to the beat. And as I was listening to you talk, one way that participants can see each other is by how we are on price. So if I get to a price cluster and I'm tapped into, let's say, the source code to the change. So as I'm watching it change, I'm more connected to, let's say, the vibration. There's no slowing down. And I would say a lot of what retail would see may be a slowed down version to where we're missing a beat. Maybe we're missing 3 beats. And then we're seeing price, and then when it flickers again, we're seeing that change, but we're 3 beats behind, not getting the full scope of the wave. And that's a big deal if you're just looking at price action, which I am kind of blown away just how powerful just looking at price itself and just being aware of these concepts put you in just sitting there at price, being able to say, and this is really what I wanted to get out, because it's powerful, just this concept. If I'm looking at how I hold price, so if I'm here and I need to transact my business and I'm really good at it, it's going to get done. And it's going to get done quickly. And it's going to all get done, period. And I'm gonna be in and out. And see, when I operate like that, I can quickly do it and that can be seen. So when I'm looking for that other side of the trade and we start to see that, a lot of the times that just watch what happens when you watch the rhythm of the beat when it finds different beats and how price responds. And then as that vibration then changes, because it's now responded, it's now recognized to this new beat that it's found. It's going to be seen. And then that changes the vibration, right? And then there's another beat comes in, boom, 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 you see price. And then just by being aware of that change of those variables, you're just looking at price. I do have, anyways, I just wanted to get those words out together because listening to you too, it's I'm just looking through the lens of frequency, trying to take the language out of it and then reconstruct it back into a language. That's my attempt. Anyways, I'll stop. Man, what a great stream.
Definitely. You triggered a couple things, but I'm gonna touch on this one thing that was triggered. Now, I kind of wanted to cover this topic a while ago, but I keep forgetting. But about like what we refer to as lagging indicators. And I hear that a lot, this thing about lagging indicators. And usually that term comes up as in promoting something that's apparently not supposed to be lagging. But if you really think about it, all of this that we're seeing on the print, on the charts, and however else we analyze this technical information, it's all a reflection of thought. So if I'm looking at this, and even in the price action, this is also a lagging indicator. It's a lagging indicator of what other people were thinking. The only way to not have a lagging indicator is to be able to somehow get into the minds of other people. Now, if you take the market side of it, or you take the teacher side of it, I just call it that to kind of neutralize it, to where you're kind of telling people how to participate, or you're giving people options for how to participate, then you kind of create the non-lagging indicator, so to speak, right? But other than that, unless you're doing that, really everything that we look at is technically a lagging indicator, because it's a reflection of the original thought. So I just kind of wanted to kind of tap into that once you kind of triggered that for me as like a final thought. Just that basically is to trust yourself and don't worry too much about what other people are telling you in terms of what is or what isn't, as in like the truth, or how to really, or what to use and when you're trying to participate in this environment. It goes back to great trades come from within. So on that note, I'm going to go ahead and wrap it up for the day. Appreciate everybody for coming through. Appreciate all the participation with the like button and and all that good stuff. Hope you have a good rest of your day, good weekend. Enjoy the long weekend. Of course, there won't be a stream Monday, but until next time, trade it easy.